On behalf of ACG Los Angeles, good afternoon and welcome. I want to first thank our sponsors today, Greenberg Lusker, Thompson Coburn, and C-Suite Financial Partners. The continued support of our sponsors is so important and so valued, especially in these challenging times. Today, we've brought together a terrific panel to look at the consumer space, where we are today and what comes next. We have a dynamic mix of executives, operators, investors, and lenders. Now, candidly, when the impact of COVID-19 pandemic hit in mid to late March, I think many of us assumed that 4 months later, in late July, we would have already exited, or we would be exiting these fraught times. Well, here we are, and it seems that we may have many more months to contend with. For those in our audience, if you have questions during the presentation, please place those in the chat box on the right of your screen. Time permitting, our moderator, Jeff, and our panelists will answer those questions. And with that, Jeff, I'm going to turn things over to you.
Hey, thanks, Michael. As Michael mentioned, JeffLabauve with Comerica Bank. I'm a senior vice president and group manager leading Comerica Bank's Long Beach middle market group. Our team is focused on owner-managed middle market companies with revenue from $20 to $500 million. Further, we have a particular expertise in private equity-backed transactions. Within those two concentrations, industry verticals include aerospace and defense, business services, environmental remediation, manufacturing, sports franchise lending, and transportation and logistics. Prior to my role in Southern California, I financed oil and gas companies and commercial real estate projects from Comerica's Dallas headquarters. I live in delightful, diverse, and quirky Long Beach with my wife and 3 children. And with that, I'd like to have our panelists introduce themselves. We'll start with Yavar. Go ahead.
Good afternoon, everyone. We hope everyone is staying safe and healthy and everyone's families are doing well. It's a pleasure to join this panel today, along with really amazing leaders from great industries, and I appreciate the opportunity. My name is Yavar Rafieha from Abbyson, and I serve as the CEO of Abbyson, online leading supplier of beautiful home furnishings, and we supply some of the largest retailers in the country. Thank you for being with us today.
Okay, Reza.
Hi, thank you for the opportunity. My name is Reza Mirza. I'm the CEO for Icelandic Glacial. Just a couple of things is that, yes, the water is from Iceland. I am not from Iceland. I get that question all the time. Are you from Iceland? No, I'm basically from India. Icelandic Glacial is a premium bottled water available in 26 countries, and I am based in Los Angeles. And that's it.
Okay, Matt.
Hi, thanks for having me. I hope everyone's family is safe and healthy during these times. My name is Matt Nordby. I'm a partner at Lion Capital, formerly an operator in businesses ranging from technology to consumer brands. And Lion Capital is investing out of Fund 4. And in addition to investing in consumer, we look at also digital businesses. So very interested to have this discussion today and look forward to answering any questions you may have.
Thank you. Rob?
Thank you, Jeff. My name is Rob Trauber. I'm the CEO of Johnny Was, based in Los Angeles. We are an aspirational lifestyle brand targeting women, typically around 40 to 40 plus. And we have 56 stores in the US. We have a robust wholesale business and an ever increasing web business, especially now during this pandemic. And we have a nice business over in Australia and plus spots around the country. So I'm glad to be here today on the panel.
Well, thank you all. Rob, we're just going to kind of jump right back into it with you here. The big elephant in the room, the thing we can't stop talking about, COVID-19. When did you first feel COVID-19 impact your business, and what did that look like?
Well, it's interesting. So I felt it coming at the end of February. I took my family to Australia. We have, I went there on a business trip. I decided to take my family, and it was at the same time that we were all reading or watching CNN about what was going on in China. And I actually had purchased masks to take with me on that on that plan. I had no idea at the time the impact it would have in the U.S., to be honest. It was just for safety. So then we came back, and then where we really first felt it was I was out on the East Coast opening a new store in Bethesda, and it was early to mid-March, and we were the pandemic was gaining traction, the markets were beginning to fall, and there was just a moment in time when I was there that we started hearing about places shutting down, and that's when, you know, our business really started to get hurt, was in the beginning of March, and we shut down our business like everybody else around March 17th. We thought we would reopen in a couple weeks, and here we are. So from that day, you know, I made the immediate decision and I remember calling my agency. I cut digital marketing in half. We started talking about what we're going to do, sort of go forward, not anticipating how expansive this would be, but it just sort of started us down the path of cutting costs. And then obviously we had to furlough all of our retail people after that 2 weeks. We kept everybody on for 2 weeks, just hopefully so that we would reopen, and then we didn't reopen. So based on California, and we just started reopening everything in June, and we're fully open now, as of mostly except for Hawaii as of July 1st. So.
Oh, great.
Yeah.
And so, Yavar, what did Abbyson see during the early days of the pandemic here? Were your experiences similar to Rob's, or do you have anything different to add there?
Yeah, sure. So similar to Rob, Abbyson, we have manufacturing facilities all around the world. And of course, we source and manufacture from Asia and different parts of China. So we actually started seeing and experiencing COVID January and really in February. We had several manufacturing facilities shut down in February. And as soon as we saw the escalation happening internally, we knew that we had to be ready and have a response plan. And we never expected, just like everyone, that the escalation was, going to be to this point and for it to come to the country. But we felt that, this is something serious. When our factories closed, especially with Chinese New Year, we immediately took action. And I think that's key. It's key to leadership and entrepreneurship is, as a leader, you have to make good, fast decisions for your business. We immediately purchased 120 laptops, video cameras. We put together a plan and we locked them up. We said we have to be ready just in case. And coming in March, March 19 in California, we're based out of Los Angeles. As soon as the stay-at-home order wasn't in place, within 48 hours, we deployed our plan and we sent our staff, all our staff remote.
Right.
And it was quite a roller coaster ride, but we did prior to March 19th, we did some tests, remote tests. And surprisingly, at first there was a lot of panic and fear, but after a week, based off the remote conferences and the scheduling we did, everything was operating quite fine. We actually did not lay off or furlough any employee. We kept all our employees on payroll, and we had set daily calls, and we learned a lot. Let's just say it's been quite an interesting experience for our business.
Great. You touched on the supply chain issues on the front end, and I know, Rob, you and I spoke about this as it was happening. I know in your business, you guys had pulled forward a lot of inventory in advance of Chinese New Year, and it just happened to coincide with the time that the virus really gained traction in China. Did anybody else in the panel experience any supply chain disruptions or any lessons learned during that time?
Is that question to Rob?
It is to the entire panel.
I mean, I'll say. I mean, you are correct. I think we were fortuitous, and we actually did have the way the pandemic fell and how things shut down. we were somewhat lucky with the inventory we were able to bring in early. But what we realized quickly is, our stores shut down, but a third of our business is wholesale, and all of their stores shut down, right? So, we started having cancellations, and we understood that we had to go after and try to cancel orders go forward, because we had all this inventory that was scheduled to come in, and we had inventory, and we were lucky from that perspective. But we were able to catch, I guess it was the first inventory we were able to sort of to minimize would be May, or actually I take that back, it was June. So what we call 530, so the June delivery. And so we were able to basically almost eliminate that delivery. So how we handled it is we sort of took out a delivery. We have monthly deliveries in our business, and we literally took out a delivery, and then pushed everything a month. So basically just sort of catching up with the supply chain and what was happening out there, and it really helped and worked with us. And we send out a catalog every single month, and we were able to move the catalog 1 month as well. So sort of to catch that business, and then we redirected all the traffic to our website and really drove that business.
Got it.
Ours was it was an interesting experience. And there were a couple of key lessons which I will just hit on. When COVID hit, just keep in mind our water comes from Iceland. And we have a very complex supply chain because our factory is on the spring in Iceland. We bottle it on the spring. But for example, the cap comes from one vendor in Europe, the sleeve from a vendor in France. And we really don't keep a lot of inventory. We had about a month and a half of inventory in the US. And in Iceland, we just keep another half a month to 1 month because we are very efficient. So when COVID hit, everyone was calling us up for water. We literally overnight, I'm not exaggerating, in one night, the entire inventory was gone. Then we had to work with our factories to also keep in mind there's a lead time. Even if I manufacture it in the morning, it still takes me 12 days by the ocean from Iceland into the US. And then I have all my customers and customers who never used to, customers who we haven't yet done business with, potential customers. So they were calling us up. And they were like, how much of water can you send us? And the first thing that we did was we got to really look after our existing customers. And so one of the key lessons was the importance of communication. We could have blown it out and just supply first come, first serve. But we made the decision that we will focus only on our existing customers, ensure they are well looked after. If we have excess inventory, then we'll go after new business. And that's which we did. And then we had I was literally working the phones, and we had our I have to commend our supply chain team in Iceland. We ramped up all 3 shifts. We were calling up our vendors across Europe for raw materials, and we executed it amazingly well. But the key part, I would say, is communicate. We kept our customers up to date on every day. We used to speak to our customers, my sales team, and again, just like you guys, Yavar, we did not lay off. We kept all our sales team, my entire team, and we just use Zoom. I've never used so much of Zoom in my life. And we just kept our customers communicated, the ocean, it's on the ocean, it's arriving on this date. And that has really helped us now. They really appreciate that now because we looked after them. And I also said no to a lot of new business because I didn't want to overpromise,
Great. Kind of pivoting a little bit here. Matt, have any of your portfolio companies had to make a dramatic pivot, i.e. a company that was only doing physical selling in retail stores to moving solely to e-com, or did they always have those capabilities? And what changes do you think are temporary, and which ones do you expect to be more enduring?
Yeah, I'll start with the last question. I think, if you weren't a digital company prior to the pandemic, you're going to be coming out of this. And I think when you look at a lot of the trends in technology, and as I mentioned in the introduction, I came from the tech industry, a lot of tech booms and innovation happened during times of crisis or anticipated crisis or governing laws changing. Example being Y2K and the dot-com bubble that was experienced in sort of the Y2K movement, for those of you that remember back to the late 90s with the boom of major companies in the tech field. And then you also saw regulation like Sarbanes-Oxley invent role-based security and identity management companies. And so as unfortunate as this pandemic is, you look at it and you say there are a lot of businesses and a lot of great entrepreneurs that are going to emerge from this that we haven't yet heard of today. And so from that respect, in fresh capital and investing, it's a really interesting time to be an investor. When I look at the existing portfolio, our goal has been really looking at current business trends, probably not too dissimilar from what Rob said in his introduction. Companies that have a store or retail footprint, needed to reinvent themselves and obviously lean heavy on e-commerce. But we were also able to do some innovative things where we could do curbside or VIP personal services, depending on the brands. And then just really being cooperative and helpful to our wholesale partners, which, you can turn on CNBC or just read the Wall Street Journal and see the challenges that the Macy's or the Nordstroms of the world have had. Those are key partners of yours, just working with them. And then the last thing I'll say, sort of in our beauty and wellness space, we were able to pivot and really get into the hand sanitizer business for major essential services companies. And so to your earlier supply chain question, being able to have a beauty and wellness incubator within our portfolio was really fortunate that we were able to get with folks like a CVS or a Sam's Club and be able to really accelerate the needs, because obviously during this pandemic, you have to throw a lot of the traditional buying plans out the window. And our goal was to make sure our companies were staffed appropriately and had the right amount of capital to be able to lean into some of those opportunities.
So how long does a pivot like that take for a company that's manufacturing cosmetics? I mean, is that a week turnaround? They're able to retool and rework everything to bring hand sanitizers out en masse, or did they already have that capability and just needed to expand it?
Yeah, so fortunately, they were one of the leading suppliers to a major grocery store chain of hand soap. And
okay.
So the movement, when you think about the componentry around soap, was not too dissimilar from that of sanitizer. And so we had all the vendors and all the supply relationships set up to get the proper formulations to quickly be able to adjust and not only ship more soap, which, as you can imagine, soap sales went up quite dramatically, but also be able to lean into the hand sanitizer. And things like color cosmetics and other innovations, fragrances, et cetera, were just less emphasized. And again, given we don't take inventory positions in sort of the beauty incubator model, it was really set up nicely to be able to meet the needs of the various retailers.
Yeah, great. So Yavar, your company was one of the early brands in the furniture category to embrace e-commerce as a core distribution channel. Can you talk to us about the journey with e-commerce, investment in space, and its future?
Sure. So Abbyson launched its e-commerce platform in 2008. And in 2010, I remember between 2008 and 2010, during the economic recession, we had a lot of feedback, and some of it was, you will never be able to ship a home furnishing product, a sofa or bedroom piece, without consumers touching, sitting on it, feeling it, and seeing it across the country. And we said, no, e-commerce is the future. And really now we see more than ever that e-commerce and shopping and consumer shopping has accelerated tremendously. And it's been quite an adventure here at Abbyson. Since April, with the supply chain, we don't just source from China, we source from all different countries around the world. And we were in a fortunate position where we do carry, months of supply in advance. So it forced us really to sell our on-hand inventory, maybe items that weren't moving as fast. But more importantly, we started seeing in April a tsunami of new customers and new orders, and new customers that, millions of new customers that would start getting added and shopping every quarter is now happening. We're seeing it monthly. And since April, May, June, we've seen a tremendous increase in home shopping and online shopping, repeat metrics and repeat engagements in terms of clicking on emails and customers coming back is holding up quite strongly. And we see this, rolling it forward. We see this continuing. We see e-commerce as the future platform, and how, we see that not only e-commerce shopping, but how you interact has changed. Whether you're a law firm or an insurance company or an accounting company, for example, we have customers that are chatting with us all day constantly, and we've had to hire very rapidly agents to communicate and chat and to provide customer service online and to customers. So it's been really interesting that what's happened. There's been, I'm sure, a lot of purchases, whether it's gym equipment or groceries or deliveries, home deliveries, and Abbyson has definitely been gaining more market share. We're expanding into multiple product categories, whether it's home office, and things have been, as I said, our plans for 2021 are happening now in terms of revenue growth.
Yeah, I was one of those home office purchasers at the front end of this. I was not set up to work at home, but I am now.
Abbyson, if not, let's talk after this call.
Okay, for sure. Now I'm off track here. So, okay, so I guess kind of back to the question I asked Matt earlier. I mean, the rest of the panelists here, are you guys, obviously there's a lot of shifting going on in the marketplace right now. What trends are you seeing that do you feel are temporary, and what are more enduring that are different than what you had on the front end of all this, or maybe compared to last year? I know that's a big question and hard to predict, but Rob, you look like you're really mulling it over.
Yeah, it's hard to say. I mean, what I would say from my perspective and my business, maybe there's always been this casualization of America, but I think it was accelerated in the past 3 months, right? Because you didn't need to, we cater to women, so you didn't need to dress up and go anywhere. Yeah. So you have brands like Lululemon, right, or even Nike to some degree that just have this moment. They've always had this moment, but they're accelerating, and that piece of our business has been doing really, really well. And I think what this time has done, apart from bringing families closer together, hopefully, it's like our customer tends to be a little bit older, and I think the use of Zoom and the use of technology has accelerated. I think the web business and selling online, obviously we've all been sort of moving in that direction for years. But for certain sects, I mean, the younger generation, millennials and Gen Z, that's what they've grown up with. But the older generations are less, slower to have adapted. I mean, they all have their Apple iPhones and computers, but how they conduct commerce on their mobile device and or their desktop, I think has accelerated and made it easier for them to adopt with ordering food or ordering products from companies. And I think that piece of it will continue to accelerate over time. I think retail will continue to play an amazingly important part of the whole omni-channel experience, but you have to be a relevant brand, a relevant retail, have the right number of stores. But I think it still will play a role in how a consumer interacts with your brand, depending on what kind of brand you are. Of course, not everybody needs stores, but so I think as we come out of this, that's the one great thing for, I think, especially the older generation, is the use of technology that they may not have been as equipped to use prior. So
great. Reza, do you have anything to add to that? You look like you're mulling it over as well.
Well, in our business, we had to adapt pretty fast because, for example, 50% of our business was the hotels, airports, gyms, the luxury restaurants, the high-end, and all that vanished overnight. But we still grew extremely fast. We are still one of the fastest growing imports. We are the fastest growing import in the US in the premium segment. And the reason why is one of the things that which we have seen is grocery, for example, in the grocery channel, the number of trips to the grocery channel has come down drastically. But then the amount of dollars they spend per trip has gone up exponentially. So what I see is the grocery channel is going to come back, is already strong. The water category is already growing there. Online, as everyone on this panel have said, if you're not relevant online, it is time you better do it fast, because what we are seeing is a lot of older customers have come in. But the interesting part of the online business is you got to invest in it, because they come in, they look for their brands. If you're not relevant, they're not going to go hunting for your brand. So when they come in, especially the older customers, is what we are finding through our insights, is they come very specifically looking for your brand. So invest in marketing, invest in making your brand relevant to that consumer. The convenience channel, I definitely will see a rebound. It's already happening, because the airports on-premise is down. I think hotels will take a long time to bounce back, but more people are doing road trips. They are now going for staycations about 100 miles to 300 miles away from their home. So I would say the convenience channel I foresee is going to actually be stronger post-COVID than what it was pre-COVID. So the relevance for the brand is you got to adjust your channel mix. You got to really ensure you are relevant for the online consumer, and execute like hell wherever you are.
Great. Anybody else have anything to add to that before we move on to the next?
I just want to add, I definitely agree with what Reza said, and Rob, now's the time, and my advice for anyone who has a business, whatever type of business you are, now's the time to invest, whether it's in your website. Yes, everyone has websites, but how do you take it to the next level? How do you improve the interactions with your customers and your clients? I had a call prior this morning with one of our retailers. His store was closed, and this is a billion-dollar brand. Is the owner of this brand for generations, and this furniture store was closed. And in May, however, when the store started slowly opening up, he said home furnishing, his numbers came in as record numbers, and he was up over 34%. But he achieved this based off zero print advertising. All the marketing and his dollars went into online advertising, and his business was up without spending. And this is someone who's been in the industry, who's used to LA Times ads and print ads and loves the print publications. So there's definitely been a lot of changes, and you can see this as, a crisis. You can see this as an opportunity to really make improvements to your business, and focusing, like everyone is, like Reza and Rob said, online and e-commerce, which is the future.
Yeah.
You got to be relevant. If you're not relevant right now, there are certain brands I've seen. I speak to people and they have slashed their advertising. We have increased our advertising online because we are investing heavily in our website. How do you make it a better shopping experience? How do you ensure your user experience and your SEO capabilities, everything of your website is strong? If you don't fix the fundamentals, you also are wasting money. So we literally redid our website. My team worked like literally 24/7 to get it, to get the whole buying process seamless, right up to warehousing. So for the consumer, it's a seamless experience, whether they go to Amazon or they come on Icelandic Glacial.com. So that is the important part. Do not ignore the fundamentals.
Now, one thing I would add is the amazing thing that's happening, and depending on what side of this you're on, it's either really happy or really sad, but is the sort of rationalization of retail space in the US, right? So if you look at Canada, you have so many fewer malls and stores, and they're very productive. It's just not overbuilt. Here in the US, we just, for lots of different reasons, whether it was private equity money or growth for growth's sake and real estate deals, we just grew way too big. There are too many malls. There are too many irrelevant stores. I mean, there might be really relevant brands who have to go bankrupt to restructure, and then they have a great, there's a core business there, like J. Crew or Neiman Marcus. They're strong brands. They just had either too much leverage or other operating issues. But at its core, they're strong franchises. And then others just grew too big, and we're going to rationalize all that. And we're going to have to figure out, different uses of those B and C malls and space that now becomes available around the U.S., which hopefully, has a better purpose than what was there before.
For sure. We'll come back to real estate a little bit later. We're starting to get a few questions in the chat box here that are on topic here. So I'll throw this one out here. And I'll ask Yavar to comment on this first, because I know he has a specific experience on this. But what are the best practices for enhancing customer engagement when you cannot have an experience in store or at an event? They go on to say websites are great for expressing a look and feel of brand, but sometimes fall short of creating deep engagement. And I think furniture is a really good example. It's like, how do you get somebody to feel comfortable sitting on your sofa when they can't sit on it?
I think that's a great question. Appreciate the question. Abbyson was one of the first brands in 2010 to launch e-commerce and selling home furnishings online. And part of that strategy was investing in product videos, demo videos, a simple 30-second video. Today there's amazing camera technology on an iPhone, and a product video, and it can really easily describe the product or the services. You can post that anywhere on social media, online. We've seen tremendous conversion versus our product having product videos or not. And we were one of the first home furnishing brands to launch hundreds and hundreds of product videos, demo videos, within 30, 60 seconds, describing what it's about, even putting in models and having people sit on the product to show the scale of the product. I think is very important. Photography, clear pictures, and just the overall experience, the communication experience. As I said, the chat box, whether you're a home furnishing brand or apparel or selling amazing water that's tasteful, I think it's very important that, for example, the chat box is amazing these days, because a lot of companies are remote, and customer service, some of the largest customer service departments are shut down, and they're all remote. So the lead times to get back to customers are accelerated and takes a lot longer than it used to prior to COVID. So the chat box is very important because it allows you real time to get answers. And that is a very simple solution, but it comes down to content, having nice content, and videos, clear pictures, detailed descriptions, to make it as easy as possible for someone to make a decision online. And those are just very simple elements that take a lot of work and teams and effort and time to build. But once you get to that point, the conversion rates are just phenomenal.
Yeah.
The other thing I would add is, talk about pictures, and I'm sure a lot of people have received these massive books from Restoration Hardware, right? I mean, if you don't have retail and you're going to be home and you want to leverage the web, and we have these catalogs too. The catalog is an amazing brand builder, because it really enables a person to get immersed in what the brand's about in just a few pages. And then it drives them to your website to do more exploration and hopefully purchase. And it's an amazing tool. It's not a lot of people talk about it these days, but it's helped us grow our business dramatically. I know it's snail mail, but it's reemerging as a really great selling tool.
Yeah, I'd agree with that, Rob. I mean, I think you and I spoke about this a while back. I for whatever reason, I started getting the Filson catalogs, which is an outdoor kind of lifestyle brand. And I'm not a hunter. I don't do any of that stuff. But I tell you what, I wanted to do it after looking at those catalogs. So they produce an amazing catalog. Reza?
Yeah, and just one more thing is just to add on to what both Rob and Yavar said is be relevant. One thing which we did is we partnered with influencers because, again, we have to be laser-like focus on who we are talking to, and we want to be relevant. So we saw in COVID, a lot of people were doing meditation at home, yoga at home, exercising at home. So we actually partnered with influencers. My marketing team reached out. So along with their workouts, they always had the water with them. And we did not stand and ask them to hold the bottle like this and say, oh, this is Iceland. No, we integrated it as part of their workout and a health and fitness regime. So it's very important, especially when people get the information, ensure you are relevant to them,
Great. Now, one comment it's kind of two comments we've got in the chat here that were part of some of our questions previously. How are you guys handling returns? I know Yavar, you guys have kind of really pioneered some of that last mile portion of the home furnishing business. Rob, I'm sure that your consumers maybe they order two of one thing in different sizes to make sure they get that right. How do you guys handle that piece?
I mean, during COVID, it's been somewhat difficult because our stores have been closed. Right? So a lot of people who had purchased would normally go into our store, and so thank goodness the stores are open and now people are returning there. But we've extended our return policy so people can return beyond the time the period that we were closed. What we're seeing, strangely, well, maybe not strangely, is our return rate has dropped dramatically during COVID. So it's either people are, buying the things they want to wear, or they just haven't gone through the process of returning at the rate they used to. And I expect that to return to a normalized rate. I mean, we are selling a little bit more on sale than we would normally have pre-COVID, just because of some backed up inventory, and that's sort of impacting the rate as well. But it's sort of some of the trends that we're seeing.
And Yavar, how about furniture? That's a little bit more complicated. If I build this thing, are you going to come pick it up and bring it back to your warehouse?
We actually will. And it's a great question. Look, I ordered from Amazon some gym equipment, and when it arrived to my doorstep, the box was horrible. It was disgusting. And it was all torn up, and I opened it and it said it was from China. And I said, what? I didn't order this from China. And I was so upset of the packaging condition that it prompted me to return it. And unlike that experience, Abbyson and as a company, we focus, in order to be successful e-commerce, to sell a product without someone seeing it, getting it to the consumers' home, you have to invest in packaging. And of course, the quality has to be exceed expectations, but packaging is everything. And if you really focus on the packaging, not just the outside, but how it's packaged inside, and get it there in good condition, speed to market, get it there as soon as possible, then the consumer, you wow the consumer, and really when they get it, it's exciting. They open it, it's, and for example, on some of our packaging 2 years ago, we said, I can't wait to join your family. We're a family business. Abbyson is a family-founded company, and our packaging said, I can't wait to join your family outside the packaging. So when a customer gets it, the furniture is joining the family, and we have inside marketing and support materials. So those little details are so important, and I think packaging is key. In fact, Abbyson returns is amongst the lowest versus our competitors, and within our industry, we have very low return rates overall, surprisingly, with all the tremendous volume that we're doing, because we've invested years in R&D in our packaging support, and of course, quality, which is where it starts.
We've invested in making returns easier by by having applications online that is more what customers might be used to with using Amazon or something. But one of the impacts of the COVID experience in our web business growing, because all the demand that was in retail stores is now on web. We weren't quite prepared for the number of inquiries and customer service related follow-up that we needed, and so we weren't staffed appropriately for that. And it's been challenging to recruit and get people in gear to handle the amount of volume that is coming through emails or phone calls, either from our catalog or just day-to-day inquiries of, because during COVID, there have been interruptions and it may not even been our fault, but FedEx might have slowed down, or, from freight and logistics operations, somebody got, the COVID and the whole, warehouse had to shut down, 3PL. So keeping up with that, and as we move forward after the pandemic, I think, and the web continues to grow, one of those infrastructure pieces is key, making sure that you have a great customer service piece of your business.
Great. Well, kind of pivoting back to Matt here, I know the last 4 months there hasn't been a lot of deal volume, but what are you guys seeing? Are there starting to become opportunities in the space? Is there M&A occurring? Can you speak to kind of deal flow, valuation, and I guess along with that, how do you handle due diligence in the midst of a worldwide pandemic?
Yeah, great questions. So we've actually been very active on the investing front, probably would surprise quite a few people. We've made 3 investments since the pandemic. 2 of them were very digital centric. I'll share a couple of them with you. One was a disruptor in the real estate space, but matching consumers to buying homes through machine learning and artificial intelligence. And so being able to understand markets, being able to digitally match buyers and sellers and provide virtual tours, that became more and more important. So about a month into the pandemic and the shutdown, we had a privileged relationship with the founder of this business, and we're very fortunate to invest behind them. And I just saw the real estate numbers, and I think our numbers were nearly 2 or 3x, 2.5 times X, I think, what they were looking at in that space. So there's a really interesting industry that's ripe for disruption. And when you look at what's happened in the auto industry with the Carvanas and the Vrooms, who also IPO'd during this time, you can see very clearly that an industry like real estate is ripe for disruption. And so we feel like we've backed a leader from a technology perspective in that industry. The second, I think, dovetails back to what analysts have been talking about is, you talk about returns and so forth, but I think it also relates to top of the funnel when you're dealing with digital marketing. So we've invested in a digital marketing company that essentially is KPI and performance driven, right? So we would go to brands, for example, and being an owner of many brands, we looked at it in the context of the lens of the brand, and you can go pay an agency and it may or may not work with their strategy. We actually have invested in a large digital media business that matches buyers and sellers, but does so in a manner where they're only paid when they perform. And so when it's a successful match. And if you can get the top of the funnel right, it makes it easier as brand owners to ensure you're matching buyers and sellers, and you're not just, browsing and getting, passive customers. You're getting people that really are passionate about products, and based on what you know about that customer, you can market products to them that are relevant to their daily lives. So that's the second. And the third is more of a traditional consumer investor. I mean, I look at brands in January that we would have loved to have owned and talked to, but just couldn't, start a relationship with them, come the end of March or April. It's still a wonderful brand. If nothing else, there's a moral imperative to figure out how and if you can help. And so we've invested in a restaurant business that's focused on healthy dining, and they've built a successful app pre-pandemic, and that's now being turned on and used. I don't know about you guys, but I've never really relied on my Starbucks app nearly as much as I have during this pandemic. And so the way you go and interact, instead of going and having a meeting at a Starbucks, for example, you're able to leverage technology to go and do a safe curbside with face guard experience and/or be able to do a delivery model. And so we've invested in a restaurant chain that has 40 locations, great group of backers. And we invested in a non-traditional way where, it was more of a mezzanine type of investment that had some equity components to it, but it was just a different structure. And I think it was more aligned to the type of investing that needs to be happening during a pandemic, so that you're not going in. I mean, everybody, we all need to make returns. We're in a for-profit business here, but there's also some great brands that if you can weather this storm side by side with them, it's quite interesting what could happen on the other side. So those are the three investments we made. And we're fortunate enough to be a very nimble firm in that, we don't have a 12-person investment committee. I mean, we look at great ideas. I didn't have a color-coded spreadsheet going into January suggesting that, if all these returns added up arithmetically, that somehow we should be investing in brands. And I think folks that did have that playbook and are just afraid to deviate from it are in fetal position somewhere under their desk in New York City right now, trying to figure out when this is going to be over and what biomedical company is going to come in with the right life sciences solution. So we're fortunate to be very nimble, very focused founder relationship. And on the diligence side, to answer your last question here, a lot of these relationships existed either tangentially or directly with our firm prior to the pandemic. And so not being able to get on a plane is probably the most disruptive thing for me because I enjoy face-to-face interaction. And I think as you look at those relationships, they really permitted a Zoom type of transaction to occur because we've broken bread or had a glass of wine with these particular founders that we invested behind. And that was very helpful.
Got it. So coming, I told you I was going to come back to real estate here. So Rob, and maybe to a lesser extent Yavar, handling of leases and landlords during the shutdown. I'm sure that was a whole lot of fun.
Yeah, it still is. Yeah, I mean, like most people, we stopped paying rent as of April. We had already paid rent for March when the pandemic was about to go into full effect, and we as a company did not pay rent for April, May, and June. And from the talking with lots of others, I think maybe 18 or 20% of people paid rent during that time from talking with landlords. Just to give you a perspective of who didn't pay. Our decision not to pay wasn't because we were trying to screw the landlords. Obviously, it was obviously survival, and everyone's drawing down. It's probably have cash, right? We're pulling down revolvers and then see where this was all going to pan out. Thankfully, all the landlords understood. I think they were in this as well, and we have successfully negotiated, I would say 80% of our leases, either abatement or deferment, in large part. I wouldn't say everyone, but a vast majority of people we've been able to negotiate successfully with, and they understand. And surprisingly, the New York landlords, who traditionally have been toughest, were the best. I think maybe because they were in the heart of it and they understand really what was happening, and so it was sort of a shock. I mean, sort of the whole Northeast relative to the rest of the country in terms of where we had help, and those are individual landlords. On the big landlord side, I was surprised, that everyone took a hard stance and saying, we're not talking, no. But I think over time, we've done well with what we thought we could do, and negotiate. So now we're in a point where we're paying because we're open, and we decided to pay all of our rents in July and go forward based on what we've structured, et cetera. And we just hope there's not a second wave, and we hope we come out of it. Traffic patterns are still way off in our business, and what I see from a retail perspective, traffic is down 40 to 50% still. I mean, not everyone, it depends upon what kind of business you are, but apparel and malls certainly. And we're lucky that less than a third of our portfolio is in indoor malls, because I think that's going to be tougher than the outdoor malls. But.
For sure. And Yavar, you guys have a couple of locations, correct?
So we actually are 100% online e-com, and we actually don't have any retail stores. However, we do have 2 locations, trade show locations, and one in Las Vegas and one in North Carolina. And we've been paying our landlord on time. There was some options for deferral rent, which wasn't necessary for us, and we haven't had the request or need to delay any rent from our side. So we've been paying our landlords, the 2 that we have. But again, we don't have retail locations. We're 100% e-com.
Great. Okay. And I guess, Reza, you guys have a really broad international presence. Anything different than, we see the U.S. every day. Can you speak to what the rest of the world is doing in response to this and how that might be different than what the rest of the panelists are seeing here locally?
It's interesting because Europe, many countries have opened up. In Iceland, 0 cases of corona now. People are watching movies, going to the movie hall, going to bars, restaurants. Its life is back to usual in Iceland, and we see that in a lot of the countries in Iceland, in Europe, especially except the UK. But Italy is back, France is back, Eastern Europe is back to a normal life. Asia has opened up again, and in fact, our orders in Asia have really gone up substantially because people realize about the importance of boosting your immune system, and they're very particular about what they were putting in the body. So we actually have seen more orders from Asia. The part which is still worrisome, Kuwait is in complete lockdown. We were looking at launching in India, which I was excited about because for me that is home. And all that has been put on hold because India is in total lockdown mode. So, but I just, we were just having this conversation. Is the world it is slowly coming back, not as fast as we would like it to, but it is coming back. Great.
And then we've got a couple of questions here in the chat, and we'll go back to my list here. So how is customer acquisition cost changed in the current COVID environment? Any thoughts on that, panel?
I would say our customer acquisition cost is at record low. It is absolutely amazing the productivity of what we've been able to do to attract new customers. And I think what's driving that for us is, and we're spending less on digital marketing, where the numbers would say support doubling digital marketing for what we're doing. But we pivoted and we started selling masks, right? And and we went with a cost 5 for 25 or 5 for 40, depending upon the fabric. And we were early. We started selling those at April 10th, and it just drove so much demand to our site. What we found is that all these people were buying other things. A lot of these people were buying other things as well. So we were able to really attract people at a much lower AUR than what our normal brand AUR is $200. So, this is much less expensive and drove a lot of new traffic and introduced the brand to a lot more people, and it's been wonderful. And so our database has grown dramatically over this time. So but we aren't spending that much. I mean, I would say even though our customer acquisition costs are really low, we haven't spent more money. We're still spending less than we are last year.
Interesting.
Yeah, mine was slightly different because we actually amped it up. We amped our spend up because because we took a strategic direction that we really want to amp up our online business. So our customer acquisition cost has gone up marginally, but then what we are seeing is our repeats are so high that going forward, like I just went through a study just now, and we have 80% of our customers, they come back. repeats are at about 80%, versus the premium water category is about 60%. So when you amortize that for the year, you can say that our customer acquisition costs will be lower, but right now that's where I'm actually investing in.
Got it. Well, we're coming up on the end of the hour here, and so I'm going to kind of finish it with a binary question that is probably more nuanced than I'm asking here. But are we adapting to a new paradigm, or simply waiting to return to normal? Well, Matt, I'll let you kick that off.
Yeah, I think it's a new paradigm. As I mentioned earlier with the Y2K example or Sarbanes-Oxley, I think consumers' behavior is going to be changed and altered forever, right? Does that mean that there won't be an omni-channel experience and that, retail is going to, every mall is going to vacate? Absolutely not. I don't believe that to be true at all. There'll still be a place for malls and experiences, but life has moved and shifted to online. I think there'll be a lot of innovation that comes out of this pandemic, and that's going to be exciting to watch, and hopefully we'll participate in that.
Great. Yavar, do you have, what's your take? Is it new normal or?
Well, definitely, this is going to change everything, and major paradigm shift, adaption, e-commerce adaption has taken a major step up. The whole country's online right now, shopping. And whether it's groceries or water or amazing apparel brands, it's definitely, things are going to change. And Abbyson in particular, we see ourselves as a winner, and we're attacking right now market share because, we see home as a quite unique category. And it's important to, again, invest in e-commerce, whatever business you're in, because it's the future. It's here to stay. It's accelerated. And it's exciting. There's a lot of good opportunities that might come out of this terrible situation, and it's how you look at it.
Yep.
I would agree with what's been said and what's Matt said specifically. I think we are going to go back to, I think once there is a cure or a treatment that's strong enough that people aren't scared anymore, I think there's a lot of fear in the market. I think we will adjust to go back to the way of life. I think there's a lot of pent up demand with travel, with retail, with social experiences that will happen, and people will catch up. But I do think the new normal is that you're going to be stocked up on toilet paper more than you were before. I think every year is a new normal in a way, and we're just going to adapt to. I think technology continues to play an important role, and we've learned how we can interact differently, and all of that's going to be great. Go for it.
Great.
And just building on what everyone says is, it is just not e-commerce. The thinking of the business model is, how do you connect with your consumer in a changed environment? How do you make it easier of an experience that they can buy your product? That is where the business. So it can be e-com. Everyone goes on e-com and all, but think even broader. What we are experimenting right now is, I'm partnering with a service. I don't want to announce it, but it's a pretty innovative way on the consumer experiencing your product at home in a safe environment. So as a couple of people here have pointed out, is it's also opened up a lot of opportunity to the traditional way of doing things. Earlier it was how much, how do you stack up the stores? How do you get the displays? All that is important, but there's so much more opportunity now which has opened up. So the brands which are going to be successful are going to be the ones who would leverage that opportunity.
Great. Well, I think we're at the top of the hour here, and Michael's giving me the evil eye, so I'm going to pass it back to him for some final comments. And go ahead, Mike.
Hardly, Jeff. Thanks a lot. I appreciate it. Terrific job moderating. And thank you, Matthew, Reza, Robert, and Yavar, for sharing your perspectives today. I know I learned a lot, and always helpful to hear that kind of on-the-ground perspective from operators and investors who are looking at this. This is certainly an ever-changing situation, a fluid situation, so we appreciate your time. I want to extend my thanks as well to Jalal Tabby from Comerica Bank. Jalal played an important role in helping to put together today's panel. And with that, I just want to say on behalf of ACG Los Angeles, good evening to everybody, and we hope to see you again soon. Please be on the lookout in your emails for our next panel, and take care.
Thank you. Thank you, everybody.
Thanks, everyone. Be safe. Bye-bye.
Bye.
All right.